Hey traders, Nick Shaheen here looking at Uber. Controversial stock, having a great day today. But before I go on, don't forget at the end there's a subscribe to this channel. If you're not already a subscriber, just hit the button, it's free to get more videos. So Uber is having a great day, up 4 or 5%, almost 6%. Oh my goodness. I mentioned recently that I'm long the stock, and I don't go long stocks often. And this is just a long-term long. I plugged my nose and bought some stock. I'm a little green, but I'm not looking at it. It's not even on my daily watch list. So the thesis for me is simple. It's too big to fail. And somebody will figure it out. Right now, they only have 3 sources of income, and a 4th one they're adding with drone delivery. So they first started moving people. Then they started moving food, the restaurant delivery thing. And now they got into freight, which is probably the most exciting of the ones that they have now, because business customers are harder to get for the freight, but once they move over, they're sticky. They're not going to jump around suppliers, and they're more profitable. So eventually, they will have enough verticals that they get into that the fixed costs, whatever they have, will be fixed enough to where the top line will overcome it. So they'll become profitable. You know, the belief on Wall Street is they don't care about being profitable. That's false. I've heard the CEO speak many times, and not one time did he say that. And in fact, many times he said that he wants to bring back capital. He wants to reward the investors. He wants, this is not somebody who doesn't care about profitability. So this is like Amazon. In the beginning, everybody doubted it, wanted to short it all the way up. This is not to say that it is the same business model, but it's the hatred to the stock is kind of similar. So anyway, so basically the simple thesis is long term somebody will figure it out. It's going to make money. It's going to It's going to be 3-digit stock. That's my belief. So you say, okay, well I'm on board, but I don't want to chase it up 5%, 6% up here. What if I wish I could buy it? I wish I had bought it down here. Well, there's a way I can do that. So here's how I can buy Uber today down here. So I'm going to switch over to a options chain. This is what the option table would look like. You have several expiration times going on. I'm going to go out in time to show this with the least amount of headache. So this is an options chain that has 176 days left on it. So I can essentially sell the 38 put naked and collect right now. If I sell 10 times 100 times $2.50 go into my account right now. So there's a good bit of money that goes into my account. I'm long Uber with no money out of pocket. The only risk is the risk is that I have to own the shares if they fall through 38. So what does that mean when I sell a put? It means that somebody out there wants to protect themselves at 38. They say, hey, who wants to sell me insurance at 38? I'm willing to take some pain on Uber all the way down to 38. Below that, I need somebody to buy it from me at 38. I'll do my homework and say, you know what, I like this. I want to buy Uber at 38. Here's your ticket. Give me your money. They'll give me $2,500 goes into my account right now for the 10 example. And they hold a ticket. So if Uber stays above 38 in 176 days, that money is mine. They bought insurance. They didn't use it. I'm the insurance seller. I made money. So I was long Uber, and I made $2.50. It would be like me buying it at 45 and it going to 47.5 and while I'm holding it, and then me selling it. That's how much money I made. So I made money, long Uber at 38, but I didn't even need to spend any money to make it. It's money out of thin air. The only thing is I promised to buy the shares at 38. So what if it goes to 35? It means that I buy it at 38. Even if I wake up on Monday and it's at 35, I'm forced to buy it at 38. I'm forced to overpay. But that's okay, because I collected $2.50 for it. So my break even is $2.50 lower. So I'm only down 50 cents at 35. So this is how I evaluate, hey, I'm long at 35, basically 35.5. That's how I can get long Uber down here right now, even though it's up where it is. So that's selling a naked put. That's it. And if I don't want to own the shares, I'll sell a put spread. So I'll sell the 38 and buy one below it, either 35, 36, 37, whatever. I'll collect money now, but my risk is limited. It's no longer from 38 to 0. It's from 38 to whatever leg I buy below it. It's called a bull put spread, a credit put spread. These are 2 terms. That's how I can generate income from Uber without being long Uber, like physically buying the shares. I can be long Uber by making a directional bet, but I have a big buffer. What is that? 20%, 30%, air math, whatever. So Uber can fall basically $6 and I'm still making money. It can fall $8 and I'm breaking evenish from current price. That's a big buffer zone that I can just sleep tight knowing that I'm not long until 38. So that's how selling puts work. And that's how I can go long Uber right now at 38-ish or lower. This, of course, there are no guarantees. We can have a market crash and go to zero. This is a startup, it can go to zero. But what are the odds? Well, if you buy the shares now, you're even in, people say options are riskier. They're not. I'm buying the shares now at 44, or I'm buying them at 38 or 35 and a half. Which is riskier? 44. So options are not always riskier. You just have to know how to play them. All right, Nick signing out.